I am Michael Baker. I am an executive editor with the BTN Group, and I know you're all tired of hearing this at this point in the show, but it's really thrilling to be up here live and in person hosting this event. And despite the bumps we've had over the past few months, let's hope that just being here is a sign that better things are on the way to come for our industry. And how soon is that going to happen? Well, that's what we're here to talk about today. So. I know if for those of you who are at the hosted buyer session on Wednesday, Eamon mentioned about how this conference is sort of a bookend for a lot of us. It was the last one we attended before the pandemic shut everything down, and now for a lot of us it's our first one back. For me especially, this panel is a very nice bookend because I hosted this the last BTS. It was the very last live event that I've hosted, and now this is the very first live event that I've hosted again. So very happy to be over here from New York and doing this. And funny enough, I remember at the panel back in 2020, wondering if we were talking about COVID or coronavirus, as we were calling it then, if we were talking about that a bit too much. And so that's why I'm not doing the forecasting here. We have some experts to be doing that. We're going to hear first from up to my left, we have Gavin Harvey. He's the Senior Global Indirect Buyer with Sodexo. He's going to give us the buyer perspective. And then we're going to hear from Olivier Benoit. He's the Principal MVP with Edvido. He's going to be focusing on the air side of things. Then we have Jason Long, SVP of Strategic Accounts with HRS, talk about the hotel side of things. Things are a little bit different this year. Of course, we'd usually be talking first and foremost about pricing, but maybe that's not going to be the most important factor going forward. So that they'll let us know about that. And then finally, we're going to hear from Emanuele Scansini. He's the Director of Partnerships and Strategic Relations with Wristline, about the ongoing challenges of dealing with the restrictions around the world and a lot more than just the pandemic. It's not the only risk factor. So as the panelists speak, you're going to be able to submit questions through the app. So if you haven't logged into the event itself, please do so now, as we have some polling coming up in a moment. And just a heads up, if you see me looking at my phone, I'm not checking email or anything. I'm actually managing that. I have to manage the polls and some of the things like that through here. So, and in addition to that, we're also very happy to take your questions. We're here in person, so if you want to stand up and ask a question, we're happy to take them that way as well. And also a reminder that there will be a survey after the session where you can talk about what you enjoyed and what you'd like to see next year. All right, so let's start with, before I turn things over to Gavin, we're going to start with a little bit of polling just to kind of gauge the expectations of the room. Let's see what your expectations are for T&E budgets. Let's have the first poll question up, please. And it's asking, by the end of the year, what do you expect your T&E spending for 2021 this year to be compared with 2019 levels? And we have four options that should come up. It's going to be a quarter or less, between a quarter and 50%, up to 75%. Or do any of you think it's going to be equal or greater? I'll be surprised if anyone selects that, but we'll give just a moment to see what comes up. Okay. I'm not seeing the results yet. Should I be seeing them, or do we still have a little more time? Okay, he can see them. Sorry, I think the online population is about a little bit behind us, so we give a little additional time so they can put in their answers as well. All right. All right, still no results? Oh, just read them, yes, because I'm not seeing them. So, wow, so there were 8% who actually did say it would be equal or more, but the vast majority said between 25 and 50%. We said it was about 60 something percent. The rest were less than 20% for the other two choices. So let's move on to the next question. It's basically the same question, but talking about 2022. So same parameters. What do you think your 2022 budget is going to look like compared with 2019? We'll just give that a few moments. Okay, and when they're ready, just let me know. I just got the results of the last one, so I'm apparently a little bit behind everyone else.
Question this time was, what do you expect your T&E budget for 2022 will be compared to 2019 levels? 8% said less than 25%, 42% said less than 50%, 38% said less than 75%, and 13% said equal or greater.
So the general trend seems to be a little bit more moving towards getting between that 50 and 75% level next year. All right, we have one last poll question. This isn't about budgets. It's just more of what I alluded to earlier. It's, as your travelers get back on the road, how important is cost going to be as a factor when you're talking to travel suppliers? So you have your options if it's less important than it was pre-pandemic, as important or more important. I should have prepared a little musical number or something while we awaited this.
We should sing.
Yeah. Is it ready?
Yep.
Okay.
So as your travelers get back on the road, how important of a factor is cost when you talk to travel suppliers? 5% said less important than it was pre-pandemic, 75% said as important as it was pre-pandemic, and 20% said more important than it was pre-pandemic.
All right, so cost is you two gentlemen can keep that in mind when you're up there making speeches. It sounds like cost is as important, but not more, not less. So thank you all for participating in that, and with that, I will turn things over to Gavin, who's going to give us the buyer perspective. So
thank you very much.
The floor is yours.
So I'm talking about three things. I'm talking about risk, I'm going to talk about hotel pricing and airline pricing. Let's start with risk. The world is very, very unequal. You've got your haves and you've got your have-nots. And during COVID, that gap grew. It grew a lot. And not everyone was aware of that, because there'll be some travellers who want to go back to where they used to travel 2 or 3 years ago, expecting exactly the same experience, and it won't be the same. When I look around here, you may have all had a good COVID. You may have you've got a job now. You may have had a job last year, or maybe you're on furlough. Maybe the government supported you. Not everyone benefited from that around the world. If you're a pickpocket in Barcelona, you wouldn't have had any support. So there's a lot of hungrier and more desperate people out there, and the world's a riskier place. So the key thing for buyers, the action, is to speak to the company that helps you with security, to make sure you can communicate clearly to your travellers that the world is more dangerous. So that's risk. Now I'm going to talk about hotel pricing. I don't like watching the news, and it's not the content of the news, it's the format of the news. Because what they invariably do, they interview someone, a random person, and ask for their view. And they aren't really representative, and they certainly don't know any more than anyone else. So it's very dangerous when you're trying to kind of predict the future. But there is a way, and that is if you look at the stock market. What is happening to share prices? Because the share price for companies is determined by the price to earnings ratio. That's the dividends they're going to be giving their shareholders. And if the share price is going up, that's because that company is planning to give their shareholders more money. And if you look at the shareholding values for Hilton, IHG and Marriott, all three of them are worth more than they were 2 years ago. That means they're planning to give their shareholders more money than they were 2 years ago. They're planning to ramp up their rates, generate more money, especially from business travellers. And so when you say what's happening, what's the forecast? Well, I know rates are going up a lot because that's what they're planning to do. and they're being very, very clear to their shareholders, if not the business community. Now, we have seen already with hotels, they used to be very, very flexible during COVID. They used to be very, very helpful with cancellation policies, and already you can see that disappearing. So my prediction on hotels is that they're going to go up a lot next year. The third point was what's happening in airlines. And I want to go back to what's happening in the stock market. If you look at the share price of American Airlines, IAG, they have not done what has happened to the hoteliers. They've dropped and dropped and dropped. They're not planning to make much profit. They know they can't raise their prices much. You've all said today, just 5 minutes ago, that you're not expecting so much travel. If you're not expecting much business travel, there won't be much business class travel. And it's business class tickets that prop up the subsidised economy seats in the back. So you may see an increase in economy tickets, but that may not be your profile. Every buyer faces a different inflation rate. We don't have our own personal rate of inflation, but you may see the economy rates going up for transatlantic, but that may not affect you because your people will be going business anyway, and they won't be going up much. What determines the price of an airline ticket? It's demand, and that's clearly gone down because of things like Skype. But also, we've seen it before in 2000 and 2008, there were massive crises, and volumes dropped dramatically, and they took years to recover, and then pricing in airlines took years to recover. So part of it is demand, we're not expecting much demand, and part of it is supply. Remember a few weeks ago in Kabul, all those planes materialising from nowhere to airlift those people out? That's because there's huge capacity. Loads of airlines have got spare planes. So what will happen? Demand will increase slowly, and supply will also increase, and that will keep putting the pressure down on rates. So my prediction is the world's going to be a riskier place. Hotel rates are going to go up a lot, and airfares will only go up a slight amount.
All right. Thank you,
Thank
Gavin. All right. We'll have some time for questions if you have some for Gavin at the end. But now I'd like to move on to Olivier, who's going to kind of focus a little deeper on the air side of things. So, Olivier.
Thank you. And I will potentially divert a little bit on the air pricing. So let's talk about the air travel price outlook. Two keywords today: uncertainty, volatility. So what can we expect in the coming months and next year? I would like to talk about actually. You covered. We need to forecast. We need to talk about supply. Then we look at demand drivers. I have a couple of price points observation to share, and eventually I would like to wrap up with a short best practice idea to manage this uncertainty and volatility. Global supply, nothing new for you. I think you are tracking airline supply, and this is OAG data. You have Innovata, different sources. If we look at the number of seats, and it's interesting to look at the domestic seats and the international seats, eventually the global supply is down 40% compared to the famous 19 baseline, slightly up compared to 2020. Very disappointing because we were expecting a ramp up this summer, especially for international at the end of this year, and it's not happening because of the Delta variant. That potentially may change thanks to the reopening of the US, the ease of travel, I think in UK as from next week. So there are some positive signals around the capacity to travel. I mean, the supply is totally correlated to the restrictions, border restrictions. The reason why domestic seats is only at 10% below 19 and international is still at 45-50% below. So airlines are managing their network planning 6 weeks ahead. This is really a very short period of time. So there is still a lot of uncertainty. They are managing through volatility, actually, that will remain like this, I think, until winter season 2022. There is a lot of capacity discipline from network carriers. When the announcement has been made by the US that travel from Europe to US would be possible, we could have expected a surge in supply this week. It's not happening, actually. And one of the reasons is that airlines will most probably look at load factors first, and then when the load factors are back to where it should be. On international, it should be above 80%. Then they may add more supply. Now, if we think about low-cost segment, they don't follow the same capacity discipline, and every time there is less restriction, you will find loads of seats available at a very aggressive pricing. So when we think about the load factors being down 10 to 15% compared to 19, it brings us to the demand level, and that's very aligned with what the pool told us. The demand is actually expected globally to be, at the end of this year, 50% below 2019. And we also believe that this demand will ramp up in 2022. It has started actually on domestic markets. That will accelerate for international trips. But eventually, this global demand, and if we think about business travel, will most probably end up 20-30% below 19, and it's also consistent actually with the pool answer. So the key drivers of demand are, if you think about people, duty of care, that matters. But you can think about the new way of working, collaborating, interacting. Virtual is here to stay. So that will drive business travel demand down. If you think about profit, maybe that's not the right word. It's more about savings. So as we heard, economics of a program matters. Pricing still matters. There are some corporations who are looking at this massive business travel spend drop that is happening today as also a good opportunity to reset the level, and we'll try to keep that low. Some are looking at reinvesting a part of these savings into sustainability, into implementing carbon budgets, sometimes offsetting, trying to avoid greenwashing, but offsetting can be done. So economics of a program does matter, but that will drive demand down, and eventually sustainability. We've been talking about sustainability during these 2 days, everywhere in this travel show. This is a hot topic. Just to share a number, we have been working with our clients to build more sustainable business travel programs over the past 3 years. So now we have some data and what we can see, the long story short, is that if you want to have a more sustainable business travel program, you must travel less. And you must travel better. Go direct, shift from air to rail, use the green guys, the green suppliers, the new aircraft type. So eventually 50% of the gain, on average, 50% of the gain will come actually from traveling less. So that will definitely drive the demand lower. Let's talk about pricing. So I will save you the traditional industry forecast, very advanced statistical modeling, because it does not make sense based on the level of volatility and uncertainty. We go back actually to the fundamentals, which is observation. So what do we learn from what we see, and common sense. So the learning point is that revenue management pricing is here to stay. So many things have changed, but revenue management pricing logic from airlines is still fully enforced, and that will remain like this. So eventually, that will actually drive some moderation in pricing on some routes, but some other routes may face a very significant price tag increase. So I've picked up 3, I think, relevant routes for business travel. This data is coming from our analytic tool. We are shopping millions of price points in GDSs. So basically, this is a pricing trend line over time. We start with US point of sale, New York, London. The average price has been cut by half over the pandemic. So now, less restrictions on travel. So we expect this to grow. So basically, it means next year you will pay more than what you pay today, but the increase is going to be maybe a one-digit increase. On the right side of the screen, you have a completely different story, which is point of sale Germany, Frankfurt to Shanghai. And here there is a lack of supply, and the pricing has gone plus 70%. So it tells us that on long-haul business class, if you are in a you are talking about competitive market, the price will remain soft. But if you are on monopoly or dominant routes with a lack of supply, even if the demand is low, you will experience a surge. The last example for pricing is a US point of sale, LaGuardia to Chicago. That's domestic US. It's very relevant to see that when the crisis happened, the pricing has been cut by half, so 50% down. But then economics in US have resumed, less restrictions. And we've seen that it's not minus 50 anymore, it's minus 10%. So we expect these trends to go on. It means that at the end of this year, you may pay as much as in 19, and you will most probably pay more next year. So the second pricing learning point, if you think about revenue management pricing logic, is that you need to avoid average per country, or just be specific, identify your key routes, and look at the trend, and then you will know if it's competitive or not, and what will be the future price increase. So as a wrap-up, I would say that there is nothing new and nothing normal. I'm trying to fight against we have to be ready for the new normal. I think it's nothing new to look at your analytics, to take care of people, to take care of the planet. And I don't think our industry has ever been normal and will not be in the future. So agility wins. Get your business intelligence right. Don't wait for the travel to resume and ramp up to look at your activity and look at your average ticket price. Don't get caught into this plus 70% increase on some routes. Calculate your CO2 emissions accurately. Talk to your suppliers. Airline they bring back people, so now they are available to meet you, to discuss. They are very open for RFPs or just extensions or ongoing management. They are really open. They are more flexible. But keep in mind the inventory management will play, so even if they are flexible, giving you good offers, be careful, you have to negotiate all the ladders in your contract. So when the inventory is closing, you still have a competitive pricing. And another point about suppliers is don't be too much afraid. We have a lot of questions around this about NDC. So NDC is still moving forward, but it's still not yet completely scalable. So that should not be your main focus. Eventually, innovation, open-minded. Learn from the crisis. Look into your set sustainability goals. Science-based targets. Build a plan to meet these goals. Start now if it has not already been done. And the last point about being innovative is to avoid looking at only air, like silo practice management. Get into multimodal approach. Look at air together with rail. You may shift with car. Even look at jet segment. I know it's not sustainable, but there is a surge in private jet. So if you are using private jet, look into that. So as a conclusion, a little bit less uncertainty for next year, still a high volatility. You will spend less, but your average cost of travel will increase.
Great. Thank you very much, Olivier. All right. And as a reminder, please feel free to submit questions as you like as we go, and we'll get to those in just a moment. But now we're going to move to Jason, who will take us through the hotel side.
Hi guys. So the hotel side, I've got to say, is very different to the airline side. In terms of yield management, the ability for airlines to move planes from one route to another, you can't do that in hotels, right? If a hotel isn't full, you can't uplift it and move it somewhere else, as you can do in flights. So completely different dynamics. And what is very interesting is when you look at forecasting, trying to predict the future, it's tough, right? It's a real tough challenge. This just shows occupancy rates over the last few years. We have seasonal variations, never mind pandemic variations. We have regional variations, destination variations. It's a tough challenge. But what we do know, after speaking to all our corporates and you guys and prospects, is the one thing that we can predict, right, is you guys are going to have less volume. And I think that matches the survey that we had at the start in terms of travel budgets. Typically speaking, they're going down, right? So you're going to spend less, you're not going to spend as many nights in a hotel. And that has a consequence. It has a consequence to your negotiation power. If you're spending less, you won't be able to negotiate as well as you were before. That's just a fact of economics. Interestingly, some observations that we saw in 2020 last year, contrary to a lot of articles and beliefs, particularly from the hotels, who encourage clients to roll rates over, We saw that by renegotiating for this year. So this is last year when the pandemic started. There was still considerable savings to be had. So obviously the hotels didn't want to renegotiate because they knew that they would be in a position where they needed to drop rates to attract business, and that's what happened. So from our clients across the board, we saw over double-digit savings by renegotiating last year. What I will say is in all the sourcing and procurement initiatives that we're doing right now, there's very little fluctuation from last year, I've got to say. You know, so I think we've hit the bottom, and to your point, Gavin, I think when the demand comes back, we're going to see an acceleration in rates across hotels, that's for sure, in the very near future. So it's important and imperative to stay on top of that. But what's interesting, right? So your negotiation power is going down, but what we also see through analysis is when we look at a lot of our corporates, obviously there's meetings and groups which will eventually come back, smaller meetings at the start, but then maybe big events like this. We see that there's a huge overlap in terms of the destinations. So a lot of transient travel and meetings and groups focus on the same destinations. 80% is there's an overlap. And in particular the hotels where people are having meetings and events and where they're putting their transient business travel, there's an overlap of 40 to 50% as well. But what we generally see with the corporates that we speak to, there's still a tendency that corporates will negotiate independently for M&G, independently for long stay, independently for transient travel departments on the transient, maybe events, marketing on the bigger M&G and the bigger events, maybe even HR for long stay relocations. It still happens, right? Not many clients have pulled all that together to increase their negotiation power. So what we're doing with our clients, what we're encouraging is to really focus on that now. As your negotiation power goes down, and we're predicting on average around about a 30% dip in transient. And that sort of correlates to what Olivier was saying on the flight side, and it also correlates to what was said in the survey at the start. Right, travel's just going to go down. But by focusing on M&G spend, long stay, hybrid, this is a sort of, let's say, a new category where corporates are putting people in hotels to basically have meetings because now they're remote working, right? So there's a tendency as well for our clients to say, look, we're closing down on office space, but we still need to get together every now and again for meetings in a hub environment. And obviously the hotels are stepping in there with all sorts of products and services. Even the reverse business travel. So now people are not in HQ, right? They're working remotely, but a couple of nights a week or once every other week, they want to go to HQ. And as you're getting further away because of remote working, there's a hotel need that was never there before because people are actually in HQ. Right? And by aggregating all that, obviously your hotel spend aggregate will increase, which will increase your negotiation power with the hotel so you can maintain and better the rates that you've had before. Most companies are just not doing this. It seems very simple, but it's just not been done with different systems, different vendors, different data sets to work with. It's quite complicated. And one of the other things that we've seen is, this is the sort of traditional view, right? This is pre-pandemic, BC, before COVID. It was all about savings and satisfaction. Make sure your travelers are fine. And for years, this has been the key dimensions that most corporates have been looking at. But that's completely changed. Post-pandemic, in the world today, and we had this conversation in one of the panels earlier, it's a very complex ecosystem that you're working in now. Most of the corporates are asking for different data points other than just price. Price and cost is still very important, as was referenced just now in the poll. But some other variables have come in. Sustainability has already been mentioned. When the corporate community need to understand the CO2 emissions, the carbon footprint they're leaving in terms of travel. With air, it's not too bad. There's a limited number of aircraft manufacturers, very well documented on the emissions from air. But on hotels, it's the Wild West. Every hotel has a different response and a different answer. So it's very difficult for you, but you're still forced to do that, right? Because you need to report on what your carbon emissions are, so it feeds into your overarching sustainability goals. It's a real problem. Safety and security. In our RFPs that we're launching on behalf of clients now, we're asking about the post-COVID hygiene measures that the hotel has put into practice. We never did that before. So what the corporate community is asking for from the hotels has completely changed. And what we're seeing is some of the savings that we're getting today because there is low occupancy. What a lot of clients are doing is they're pushing the savings into a better quality of service, a better standard. And I think you touched on that as well, Olivia, from a flight perspective. If you can save money because there's not the hotels who are giving away better deals at the moment. Instead of just saving money, it might not be that important, but what is important is increasing the quality of the hotel, making sure that that hotel has the right hygiene factors and measures in place. Maybe the hotel is more sustainable. And that's a big issue, right? Because if you're a hotel and you're really pushing sustainability, an eco hotel that is really careful on how it operates, it's looking after the waste, the energy and the water consumption. These guys can have room occupancy, when you stay in a room, you can have 5 kilograms per occupied room night in terms of carbon emissions, which is pretty good when you benchmark that against the average, which is around about 45 kilograms, 9 times as much. So if a hotel is really trying to get on board the sustainability vehicle, but they can't express that to you guys, it's a problem because you can't make informed decisions. So that's a trend that we've been seeing as well. So when it comes to hygiene, we saw from our clients, 86% of them are actually saying, I need this information to make my decision. So it's not just on price. So you can forecast price, but it's not the only thing that you need to look for. And what we've seen just this year is an increase of the hotels that people negotiate with. We've seen an increase from 43 to 77% of the hotels we negotiate have now been accredited with what we call clean and safe protocol. We go through a very strict set of criteria to make sure that the hotel has gone through certain hygiene measures so it's fit for purpose. We have a similar system when it comes to sustainability. 88% of our corporates say we need this information. We need this information to comply to our initiatives globally. Remember, your companies will be fined if you don't live up to these sustainability targets. It's imperative that you measure this and you report on this. And what we see is even our clients are now encouraging the hotels to get on board this protocol. So when we send out RFPs, they're saying, I'm mandating, I will do business with you, Mr. Hotel, if you give us the data that we need so I can report on my carbon footprint in your hotel for the wider goal of sustainability. So it's a very new world, I would say. So we call it this 5S framework. So savings and satisfaction is always going to be there, but we supplement that with sustainability, safety, and security. It's a very different negotiation now on the hotel side. So in summary, we see gains on convergence. What I mean is really analyze your long stay, hybrid M&G spend. Use that. That will give you a better picture of the key destinations where you should be negotiating and spending your efforts. The database decisions, again, it's not just price anymore. That's history. It's not just price anymore. Make sure you're working with providers and systems that give you the data you need to make informed decisions from a procurement perspective, but also from a traveler's perspective. The travelers want to see when they book in their online booking tool that it's a sustainable hotel. The travelers want to see that. They want to be part of that process. So make sure that's the case. One size does not fit all. We don't have time to talk about chain-wide discounts and negotiated rates, but it's not black and white. Everything works. So one size doesn't fit all. So work with providers that can understand when certain rates make sense for a certain hotel in a certain destination according to your needs. And that's my perspective. So thanks for that.
All right, thank you, Jason. So a complex topic becoming even more complex. So, all right. So our final speaker before we turn to your questions, we have Emanuele, who is going to talk about risk factors, and it's not just COVID. What are some of the risk factors that we're looking at in the coming months and years?
Well, first of all, I, for one good reason, left COVID-related risk at the end, because I think all of us have heard about COVID too long, and it's good to have a change and a wider perspective, probably. The other thing is, nobody has a crystal ball, so we cannot really predict single events, and it will be impossible to predict human behavior, but we study patterns, we identify things that keep happening, and then we know that they are becoming increasingly likely or increasingly, dangerous in the type of impact that they have. I think the first and the main thing that I'd like to mention is climate change and extreme weather events. So I guess it happens every summer, every year. We pretty much look at what happens around the world and we say, last year it wasn't that bad. So it has happened this year too. If we think about, record hot temperatures around Europe, around the world really, or about wildfires in Turkey, in Greece, in Italy, in Spain too. All this is happening more frequently. More areas get under wildfires and such, and this is likely to continue. And other, natural events start to have a more significant impact. We see like rainfall is getting heavier by volume every time, but urban areas keep having drainage systems that is like decades old, and so is unable to work pretty much. Or flooding. Let's think about what has happened in Central Europe in July, or in New York a few weeks ago. So all this is going to happen again and again, and we need to consider the more long-term risks that are related to this. For example, migration. The worsening of weather conditions around the world will trigger a more pronounced trend of migration that maybe in recent months, in the last 18 months, has been less prominent because of the pandemic. Or that wildfires and other extreme events may push, wildlife, out of their natural habitat, and this may trigger more, new type of disease, maybe as it might have happened with COVID. And lastly, but not least, authorities. They might be in a situation, if a country is still crippled by infections and death rates of COVID-19, that they might be unable to react promptly if there is any natural disaster. So this is something that should be considered. Second, very important, the last 18 months, the pandemic has kind of switched our attention to something new, but all those trends that led to US 2016 elections or Brexit, they are still there. What was driving towards those outcomes internationally is still there and pretty much will not change. So we can see this, for example, US foreign politics, although there has been a significant change in the administration, the trend of like isolating, pulling out of the rest of the world is continuing without any change from previous administration. This is giving an opportunity to other regional powers like Russia or China to, for lack of other better words, do whatever they want, pretty much. So this is something that you may want to consider, that areas around the world that are in potentially contentious geopolitical areas, they may suddenly have a crisis that you don't expect. A good example would be Taiwan, for example. And then there is the EU. Now that after 16 years, Germany will have soon a new chancellor. We will see if like power balance within the EU is going to change and how, and whether there will be any reversal into the Brexit decision here in the UK. I don't know. And also what will happen with like other player in Europe, if they will be able to create a single defense or not, for example. For sure, anti-systemic protest will continue to be there. So now that like lockdowns and movement restrictions are being reduced around the world, there will be what was pretty much happening around the world until the end of 2019, protest against the system. So this is also collaborating to this sort of kind of wider picture that I'm trying to describe. Terrorism. I think few of us, except maybe the large-scale event in Kabul a few weeks ago, has even thought about terrorism this year because we were busy thinking about something else. But there have been actually quite a large number of terrorist attacks, mostly in poor countries that they are not so interesting as Western worlds, unfortunately. But like there have been many terrorist attacks. There will be even more so in 2022. Good reasons could be that there will be a return to mass events, and for sure this will provide a great opportunity for maybe lone wolf terrorists, and what has been happening in Afghanistan, it might lead to a consolidation within the terrorist galaxy. It's important to remember that terrorism is not just Islamist terrorism. We have also seen a large increase in far-right terrorism. In fact, the year 2021 has started with the storming of the US Capitol, which was pretty much shocking. So intelligence agencies around the world, around Europe actually, I think in Italy a few weeks ago, were warning about potential connection between the no-vax, no-pass galaxy and potential low-scale terrorist attack. So that's also something that should be considered. Cybersecurity. As organizations, governments are going more and more digital, well, we can only expect that there will be an increasing number of, cybersecurity-related incidents. We saw something very significant in 2021 with the Colonial pipeline or the attack on Brenntag system in Germany. All of these led to companies having to pay pretty much. And this happened because the security system was not well protected enough as it should have. This is definitely going to continue. Something related, as we go more into a digital world, there will be an increasing amount of scams, also related to, the demand for COVID-related documentation or testing, like whether it is fake vaccination certificates of COVID pass or stuff like that. So there will be a black market, and the digital world will offer a very, very tempting environment to host it. Last but not least, the pandemic. So I think it's great to be back in person. I think for us it's the first time we're traveling again. And I think it's a good first step towards resuming travel. This will probably continue, hopefully, at least in the bubbles where we are. I think, within Europe, between Europe and North America, hopefully very soon. But it may probably take a while between other regions, like Asia especially, will be brought back into the picture. There is too much that is still unknown, and we cannot assume that next spring everything will go back to normal. For example, we don't know what is the long-term efficacy of the vaccines. We don't know if there will be new strains. We don't know what will happen now that schools have reopened in Europe a couple of weeks ago and such. And also, we don't know how long will it take to the developing world and poor countries to bridge the gap that there is, if you look at the map, between the high pace rate of vaccination that there is in European or North American countries and other poorer countries where the levels are stagnating. Besides that, there are some COVID-related risks that for sure will be there in 2022. Fake news. That's the main peril as I see it. Fake news are bound to, kind of jeopardize or derail the effectiveness of vaccination campaigns. And organizations should do whatever they can to avoid that. There is also risk, of course, in poorer countries for this to translate into violence against the government, because maybe the information is not as transparent and balanced as it is in our societies, I guess. The other sure thing you can expect, there will be protest. There will be protest because no vax, no pass movement is still very strong in most of our societies. There are still, 1/4 or more of population in the society that they don't want to get vaccinated. And there will be, of course, the effects of government subsidies running out, and people being laid off, running out and being fired, and the socioeconomic impact of the pandemic that, in my view, we have not really seen it at in our societies pretty much, because governments were sheltering all of that. Lastly, one comment: we don't know whether there will be an international dispute or conflict about what really was the origin of the pandemic, whether it was a natural one or something else. But I suspect this is something that will play into the collapse of the international world order and US versus China type of thing, as we have seen before. So be prepared, I guess.
All right, that's a lot to ponder. so thank you very much, Emmanuel. All right, so now it's time for your questions. I'll start. We have one that's come through the session here. It's for you, Jason. It's specifically asking that it said a few months ago that HRS had a goal for the number of hotels they wanted to sign up on the Green Stay program. So they want to know how many have actually signed up and how it's matched against the targets that you'd set.
Yeah, well, we launched that in March, so it's still work in progress. One of the interesting things what we can do, hotels can subscribe to that, right? So we collect these data sets and then we can validate that to make sure the hotels are telling the truth. But what we can also do for the hotels that haven't yet subscribed to this service, based on the intelligence that we have, we can use algorithms and AI to give a prediction of the carbon emissions as well, based on the number of rooms, the amenities, where it sits geographically, climate conditions, etc. So we don't necessarily have to have all the hotels subscribing to that to offer information. But obviously, it's when they do subscribe, it's very granular. It's really down to the room night carbon emissions. If we benchmark the green initiative against what we did in Clean and Safe, which is the hygiene initiatives, which we launched last year, around about 80% of the hotels we have in our inventory are subscribed to that now. We see no reason with the Green Stay initiative why we shouldn't follow the same curve. We need to educate the hotels, and that takes a bit of time. As the hotels are coming back online, staff are coming back, that's something that we're doing right now.
Okay, great, thank you. All right, do we have any questions in the room?
Travel coming back is staffing, because I've seen it already. Hotels don't have the staff. Hospitality has been absolutely decimated. So what do you think is going to happen?
Well, you're right, and a lot of hotels are slowly coming back online, and some are still at limited capacity because of that. Some hotels still are limited on capacity because of certain COVID restrictions as well. So we're not going to get back to the same levels of capacity anytime soon, which goes back to Gavin's point here, right? But we know demand is going to come back. Well, will the occupancy levels or the available rooms to be purchased rise in a similar fashion? Depending on the market, that might not be the case, right? And even the UK, let's face it, there's a real problem in the UK now for staffing. So you may find that the prices will rise faster in the UK because of that. And actually, we're seeing that now in the negotiations we're doing on behalf of our clients right now. We see the UK is trending to be more expensive right now when the market is at the bottom, but the UK is already having an inflation effect, and the staffing could well be a part of that. Don't have the answer. I don't have people that can work in hotels, but.
And Olivia, is staffing an issue on the airline side as well? We hear a lot about potential pilot shortages and things like that. Is that something to watch out for?
I don't see it as a challenge as in the hotel accommodation. But airlines have been very keen to protect their skilled staff, if you think about pilots. So when they are increasing their supply and putting more flights online, they have the ability today to get the pilots and staff to operate it.
Okay. And there's also the staffing of the companies themselves and their own travel programs. A lot of them have had reduced staff, and fewer people are having to do more things or do things outside of travel. So there's an issue as well. Do we have any other questions in the room? All right. Well, the floor is yours.
Any insights on car rental? We didn't talk car rental at all.
Yeah, I can share what we recently experienced. So we've been closing a couple of car rental over the past 6 months, and it looks pretty bad, in terms of price trend. So you're aware that the shortage of electronic components is disrupting the supply for car manufacturers. So it has impacted dramatically the ability of the car rental companies to ramp up their fleet. So over the summer, you may have experienced absolutely insane pricing on car rental. So we were hoping that this shortage of supply would last maybe a couple of months, but apparently it's going to be longer than that. So basically the practical answer is you definitely need to look into your car rental program. If you are into a single provider model, that could make sense, but you really need to assess the value to potentially provide backups to your travelers.
And Gavin, have you been working with car rental and have any thoughts on that?
I think that it's a very challenging period at the moment. Car manufacturers used to sell to the car rental companies with massive discounts. And right now, they don't want to bother because they know they can sell their vehicles to the public without giving them any discounts. So the car rental companies are having real problems in getting their fleets up to scratch. And so they don't really want to give you massive discounts because they know they haven't got much to offer, and they'd rather charge the public a higher rate. So it's a very, very difficult market for car rental at the moment. And that's all because of the chips.
Just a little anecdote. I live in Spain, so I'm over for this event. I'm using the opportunity to go to Middlesbrough to see my dad. And normally I rent a car, but the car prices were so crazy, and I was also a bit worried about being able to fill the car up with petrol. You know? So I'm getting the train from King's Cross.
Yeah.
So there you go.
Well, I'll say, you mentioned the pipeline attack, that with all your gas shortages here, at least you don't have people filling up plastic bags with gas like we had in the U.S. So that's a different story. All right. So I want to ask a few questions about policy predictions. And Jason, you had talked about pricing with hotels and how it might be less of a factor when you're looking at trying to get into clean and safe hotels. With airlines, do you think we might see relaxing of premium policies? I was lucky enough, I had a whole row to myself in an economy section on the way over here, but I don't think it's going to stay that way for too long. So do you think that maybe some companies that have become more strict on who is allowed to travel in premium classes might become a little more lax as they're trying to encourage their travelers to get back on the road?
We have not really seen that as a global trend. We have had some very specific situations where a company will allow people to move from back to the front cabin, but that was more driven by the biosafety consideration. There are some talks around traveling less, for good reasons that could make the total spend significantly lower, so it could be an opportunity actually to be more flexible. So less travel, but in better conditions that will allow the company to increase their wellness and satisfaction score. On the other hand, when you travel business, you may have a negative impact on your CO2. But so that's you need to look at the total picture.
Okay, great. And Jason, you started to go into this a little bit, but talking about the idea of not wanting to extend current rates, and then you talked about kind of chain-wide discounts and dynamic pricing. Is that going to be more attractive going forward? In light of it, you wouldn't have to go back to the table so many times.
Yeah, as I tried to convey in the limited time, it's there's not one size fits all. There's always a debate, isn't there? Do we do chain-wide discounts or we do negotiated rates? The true answer is you do what makes sense for your company, and that adds more value. And for certain hotels in certain destinations at certain times, a chain-wide discount could be the right thing. And sometimes it can be a negotiated rate. Or even the spot market. I think a lot of corporates spend far too much time wasting effort and energy negotiating with properties that are not even that relevant, to be honest. And that's something that we spend a lot of time working with our clients on, to make sure we're really concentrating on the core markets, core destinations, core properties, making sure it's not just the price, making sure the availability is high. Because a lot of hotels can play games, right? They put the rates in different systems to pay, for yield management purposes, right? So they close down on certain systems, including the GDS, including us, HRS. That's what these guys do. So you need to monitor and make sure that even when you've negotiated the rate, it's there to be purchased. Like if you have a 10% fluctuation in availability, so typically the GDS is float around about 70% availability. So the corporate rates generally are there 70% of the time, right? Generally, because when a hotel is full, it's full, right? But we also know the hotel plays games. If you manage to get that to 80%, from 70 to 80, that's 10% difference. We know from our own research when the traveller doesn't get the hotel they wanted, they still travel. They don't not travel because they don't get the incorporated rate. They go to a different hotel. On average, it's 25% more. 25% more. It's 25% of 10%. If you can increase availability by 10%, that's 2.5% of your entire hotel budget right there in cash savings. If you got, like some of you have got a hotel budgets of 100 million, let's say, for big global corporates, that's 2.5 million right there just on availability. How many of you are checking the availability of your hotels through your providers? Probably not many.
But I think that at the moment they're relatively empty, so it's not too much of an issue. But as a buyer, I think chain-wide discounts are key. So if you've got one action to take away from today, I would say sit down with your account manager and ask for a report and go through the top chains you have and have them sorted by value, and then work out which ones you have chain discount deals with, and then are there any gaps you need to speak to those hoteliers. And because your travellers may not be going to the same hotels next year and the year after, having a chain-wide discount, you should be able to capture at least some form of savings.
Okay, great. So I have a question now for Emmanuel. It's kind of the divergent strategies we've seen in countries around the world where we've seen some kind of still holding to a COVID zero policy where the idea is to completely eradicate any trace of infection. And we've seen more and more countries are moving away from that. I don't know if you saw the news this morning. Australia is going to be opening its borders, at least to people going out, not to necessarily going in at this point, but their residents can travel internationally if they're vaccinated and still have to do a 7-day quarantine when they get home, but it's better than a 14-day quarantine in a hotel. But so they've kind of moved away. New Zealand is stuck with it. Hong Kong is stuck with it. While Singapore's moved away, that kind of burst the bubble that was developing between there. So the question is, will countries still hold on to COVID zero policies, and will that cause disruptions in the travel chain, or do you think eventually everyone's going
I
to
think
give up, that
eventually
that's a realistic
everyone is
goal?
just going with a free for all approach and like try to open up and trying to get back into letting travel run as freely as possible. If allowed epidemiologically, I guess. So.
Okay, great. So we have a few more minutes. I probably have time for one or two more questions if we have any in the room. Anyone else have a question for anyone on the panel? All right, did we have one there, or were you just shifting? Oh.
I think we had a
Oh,
question for the
was there
lady.
one?
Thank you very much.
Yes.
Sorry I was late, but
That's quite all right.
good afternoon. I'm actually from Zimbabwe, and I'm based in the UK. It's the head of tourism for Zimbabwe. And my concern when I looked at the heading on policies for 2022, we are from Africa and we are listed in the red traffic countries, which if, for example, we can't even come to the UK, for example, and exhibitions like World Travel Market, they're actually out for us. At the moment, I was late. I was trying to scout for accommodation for our delegates coming for the summit in Glasgow. And the amount of hotel rates for destinations like us is just unbelievable. Is there a way that the meetings will also consider destinations like us and offer favorable rates for our business travel? Probably it's off topic, but I just thought let me throw it into the discussion.
Sure. Does anyone have thoughts on?
This is something, I'm not answering for accommodation, but I know this is something that airlines have been doing. So the airline price grid is also point of sale based, so it depends where you come from. So the type of price grid will be adjusted to the economics of the point of origin. And I'm not sure that is something that is applicable in the accommodation industry, but this is something that can be managed.
All right, great. And
As I said, hoteliers are expecting huge profits to share to their shareholders, and they do that through yield management. They want to maximize the rates. So it's very bad news, I'm afraid.
all right. Well, on the note of very bad news, that I believe is the end of our time. Thank you so much for attending. Just a reminder to fill out the evaluation form through the app and enjoy the rest of the show.